Now take you back to the invasion of Ukraine on three fronts by Russian military early Thursday, setting the global markets on edge. Uchenna Menis is the global strategist and managing partners at Howard Menis, and he joins me now on the show to analyze how investors are trading the fear factor, in particular for emerging and frontier markets. Uchenna, thank you very much for coming through to the show tonight. How much fear of what is already known is priced into the market sentiment right now, my friend?
Thank you, Boston. Thank you for having me. Boston, it's just early days, and what we can see in the market, market participants and investors alike, reallocating their funds from risky assets into safe havens. We can see the panic already in the market space. We saw risky asset, the S&P 500 really right now it's now been tagged to be in the bear territory, losing about 2 point something% on that trade. We're seeing oil trade in the reverse direction, given the fact that the supply chain of really giving oil Russia as they are the behemoth in the market space, that has started to affect in oil prices. So our prices trade higher for like 4.06% today, intraday levels. Gold, as we can see already, is also appreciating significantly on the back of as a safe haven asset. The reverse is the case when you go to crypto assets. As you can see, when there's liquidity detriments, really, so some sort of bad news, you would get to see Bitcoin and other related digital currency reacting as well. So it's still early days, boss, and that's what we're seeing in the market space. We don't know exactly how to price in this risk. We don't know how wild it can get. It's just the early days of the invasion. So we're not sure.
Early days, Uchenna, but that's my concern about this the invasion crisis. How do you think it should play out over the short to medium term? But first, what asset classes are on the firing lines right now? You mentioned a few. Even Bitcoin and cryptos are getting routed today.
Yes, Paulson, we don't know how bad it can get, and the truth of the matter is we hope that this stops at this point, and maybe there's some sort of diplomatic intervention. But however, if we want to start the pricing this risk, this can really get bad throughout the global financial markets, really. When this sanction starts to hit and say there's some sort of retaliatory attack from, say, NATO forces and coalition forces from the West trying to deter Russia, then we probably might be looking at a possible World War III, if I might say that, and that really is not good for the market. Russia in itself, their index basically have dropped for about 40 to 50% today, and the way Russia has positioned itself, given the fact that it's an energy behemoth, I think we're going to be feeling an effect across global supply chain, Boston.
Yeah, but the fear that we are seeing expressed on the market street, you are a market strategist and you're a trader and investor in the market. You look at the CBOE VIX index, that's very strong, double digit, just about 2-3 hours ago. It's moderating right now to around 9.2% just before I came into the studios. The Indian VIX index was more than 30% today. Do you think investors are overreacting to these early days of this invasion? Is it being overpriced, or you think they've just been moderate, not knowing what happens tomorrow? Like you said, no one knows exactly how the US and the Europeans will react, and whether Putin would have made his point and decided to slow down on this invasion.
I don't think it's been overreactive, really. I mean, this is a precursor to a possible World War III. I mean, that's how huge it can get, So I don't think it's been overreactive. I just think, as you know, with market participants and investors, they actually like to trade before the event in itself, and this event was all diplomatic at that point, all conversations at that point until now. So the reality now is on ground that Russia is looking to have started to invade Ukraine, and that's been pricing in the market. Now, the degree of this invasion, how bad it can escalate, is what investors don't know, and they will just stay reactive, and you get a lot of emotional reaction on the market, and that's what we can see with the VIX trading in a high level. We could expect that to go higher going into tomorrow because some of the news from Russia is saying that they've just finished their today's target by hitting about 84 targeted sections in Ukraine. However, we don't know what's planned for Friday. And Putin has clearly said that he's going to go all out and against anyone that comes in his way. So we don't know how bad this can get. And that's what we're seeing in the market at the moment.
So if we step up the conversation, what are the implications, the good, the bad, and the ugly, Uche, for emerging and frontier markets? How bad or how good or how ugly would this be for us on this side of the Atlantic?
Yeah, Paulson, it's very simple. Where we are now is when you have two elephants. Two elephants in this case is Russia, the U.S. via NATO fighting a proxy war. The grass would soften, and that's what the frontier and emerging markets would be, given the fact of how we are very dependent on global supply chains and should I say engagement and whatnot. So we would be at the short end of the stick, given the fact that we are highly dependent on for us importation and sort of exportation, regards with what we produce or what we want to get to help in our production and whatnot. So there is no how this does not have a significant detrimental effect on frontier and emerging markets. We'll now go to currency, the strength of our currency against G7 currencies that we trade with. So we would further see some sort of devaluation in our currency against, for example, the US dollar.
What should be my defensive positions right now? How long should I stay if I'm taking a bit of a defensive position right now in any of the assets?
Also, just go get yourself some gold. Get yourself some gold, and it's clear when it comes to these things, when it looks like there is some sort of global war deterioration of some sort and this risk is escalating, you can see that everybody still realize that traditional asset, that yellow metal, still has its intrinsic value, and that's what we're seeing now, Boston.
Well, I'll take your advice. I'll see if there's any gold hanging in somewhere. But again, thank you so much for speaking to the latest global issues. Uche Daminis of Howard Minis Asset Management. Thank you so much. We appreciate you putting the global market situation right now into some context for us.